Good morning, everyone. It is Wednesday, August 2nd, and the market should have gotten off to a terrific start today with the ADP jobs report. Wednesday, August 2nd, as you can see, ADP employment. The forecast was 175,000 jobs added to the economy. The actual number came in at 324,000 jobs. So you would think that that would give impetus to a rising market, but then we have the morning news. Fitch downgrades U.S. long-term rating to AA plus from AAA. Not such a good thing. And I can go into the reasons for this, but it really doesn't matter. U.S. debt has been downgraded, and that's going to negatively affect the market. So let's go over to the market. The market started, well, here was my forecast based on Taylor. Now, Taylor, that's the George Taylor trading technique. The Taylor trading technique takes into account the open, high, low closing prices of several previous days. And basically, these are average measurements of market movements or price movements from lows to lows, lows to highs to highs, and highs to lows over a period of several days. So based on that, usually we get the range being pretty accurate, but not so much the actual support and resistance numbers. And that's because of these announcements that come in overnight. The ADP report came in better than expected. The market has downgraded U.S. debt. So these reports adversely affect the averages. And so the averages will always come back because they're averages, but news that hits the market skews the numbers. So, but the range, remember, the range is usually accurate. So the range today is, let's see, let me tell you what the range today is. Looking at my Taylor calculator, the range is 20 points. And there's another thing about the Taylor calculator that helps me in another way. And that helps me look back to determine where markets have closed that haven't revisited those prices. So in other words, where gaps exist. And so gaps existed, and I'm going to tell you where they were, where they existed. There was one that closed yesterday at 45.64. That closed, that filled on it closed on July 27th. And oh, just a minute. There are two more gaps, and let me call them to your attention because I'm going to show you something on the chart. You're going to be interested. There's another gap that's opened at 45.09 that was created on July 12th. And there is a gap further down from there at 44.73 that was created on July 11th. So, okay, so now you know where the previous gaps existed and the market has not filled those gaps. So today, I've already explained to you why the market is down so much from where it should be. And so here's the 45.64 gap. And as you can see, when the market opened, it sort of gyrated around that previous close, although it was closed on July 27th. But I also told you that two other gaps exist. And let me show you where they are on my chart. Pretty big drop, right? Here's one at 45.09. Okay. And here's another one at 44.73. And remember, these gaps will fill. These gaps will fill. Don't know when, but they will fill. Now, maybe the market is headed that way today. It certainly looks like the market is going to have a negative day. Although I'm not in the market because I don't know where the market is going. The market has basically reacting to the, there's also something else. There's the high employment numbers, better than expected employment numbers. There's the downgrade of U.S. debt. And then there's the Donald Trump thing. And I don't have to tell you what that's all about. So I don't know whether that affects the market. But the market is, as you can see, trying to make a comeback. I don't know where the market is going today. I just did want to caution you about existing gaps that will eventually fill. I doubt that we will have the market trade down to 45.09 today. It's a pretty long drop from 45.64. Let's see, that would be a 55 point drop from here. But, stranger things have happened. At any rate, you might want to keep your powder dry. Watch the market. Some days it's better to just hold off, even though in hindsight, could have made a lot of money if I got in here and sold there. Don't have that mindset, because you never know. What counts is what you don't see. So let's see where the market seeks to stabilize. If it can stabilize, it looks like the market put in some kind of an attempt to stabilize itself at the previous 45.64 level. Let's see if the market reaches that. But actually, the high of the day was put in at, let's see, at right over here at 942. The high was 45.70. We'll see if it comes back to that. If not, looks like we're going to have a down day. This might be the intraday high, 45.70. Anyway, that's my video for today, Wednesday, August 2nd. Marv Eisen from Timeless Dollar Trading Academy. If you'd like to get some insights on how I trade, on how I can perhaps show you ways to trade that you hadn't thought of, you might want to consider taking my course at timelessdollar.com, or even check out the Taylor calculator, usually accurate in terms of range, not always in terms of support and resistance, but professionals have used it for 75 years to trade virtually every market. And so that's my video. Thanks again for watching. Trade safely, use lots of patience, and I'll see you in my next video.